All right, I think we're ready to begin. Hello, everyone. Again, like I mentioned, my name is Matt Stock. I'm the Director of Development for the Alumni Association. And on behalf of alumni, I want to welcome all you gauchos to the inaugural Black Alumni and Student Connect Weekend. We're so excited to get things started. We thank you for joining us for this series of professional development events, for helping us build community, and for supporting our Black alumni and students. A special shout out and thank you to our planning committee, alumni board member Cindy Chinadu, Ryan Newton, Shauna Wright, who's with us today, Casey, MJ, Philip Tucker, Michael Citron, Leslie Klonoff, Diane Duda, and Alondra Chavez. Thank you so much. And a special thank you to the Alumni Board of Directors, who some are on this call as well. Thanks for your leadership. As a reminder, this event is hosted as a webinar and will be recorded. As an attendee, you can submit questions in the Q&A throughout the webinar and send messages to other participants. Now I'm delighted to introduce one of our committee members and alumni board member, Shauna Wright. She graduated in 2006 with a degree in Law and Society and Sociology with a minor in Black Studies. So Shauna, take it away.
Thank you, Matt. And good morning, everyone. Good afternoon for some of you who may be tuning in from other parts of the US or the country. And like Matt said, I'm so excited and honored to be participating in the first Black Alumni and Student Connect Weekend. By participating in this event, all of us as gauchos and even non-gauchos have the opportunity to celebrate the launch of the Office of Black Student Development and also celebrate UCSB Black alumni, especially during Black History Month. And our speaker today, DJ Posley, is a perfect example of a UCSB Black alumni whose accomplishments are noteworthy and deserving of being celebrated. DJ Posley is from Hazel Crest, Illinois, and graduated from UCSB in 2009 with a degree in sociology. While at UCSB, he participated in campus organizations such as the Intercollegiate Athletics, the men's basketball team, Black Pioneers Renaissance Organization, BPRO, Black Student Union, BSU, and was a member of the Black Graduation Committee. During his time at Santa Barbara, he built lasting relationships with faculty, staff, and his peers. As part of the men's basketball team, he was part of the team that set school records and won the regular season conference championship to advance to the NIT. DJ was not only active on the basketball court, but he also mentored incoming freshmen and transfers in order to teach leadership and team building skills. He is the founder of Energy in Chicago, Illinois. Energy is insurance, information, and energy. His company strives to be well-rounded and a comprehensive problem solvers. Their belief is that life is a continuous engagement with obstacles, challenges, and opportunities. How you respond to these different circumstances determines the type of results that you'll experience. Their specialties include development, capital, health, insurance, information, energy, fintech, public finance, business management, smart city, digital economy, and digital assets. He is also the chairman of the board for DWEAST Association of Advisors, where the focus is on equity and the digital economy for associations and the members they serve. Their innovative market management program focuses on building business working capital at the intersection of real estate, healthcare, and financial services. Without any further delay, I'll turn the mic over to DJ.
Yeah, I wasn't going to get caught on the mute talking. Thank you for the introduction, Shauna. With this digital economy, mutes and talking while people are just looking like what's going on. So technical difficulties, I know we started with some here. And so thank you all for being patient with us. And thank you for the entire group of the board, the institution, UCSB, the Alumni Affairs Department, and definitely someone special to me, Coach Stock. I call him Coach Stock, Matt Stock, for thinking so much of me to introduce me to this opportunity, but more importantly, introducing me to UC Santa Barbara. So I like to follow him wherever he goes because he guides me to some beautiful things. Today's workshop is covering financial security and investments. That's something that is extremely close to my heart because not only do I take it and take a very unique, innovative approach to that conversation, but it's something that I grew up in this space with my parents owning all state businesses for as long as I can remember. And my first job starting in the financial services industry in high school, and then getting licenses immediately after graduating from UCSB, even taking some licenses in the middle of the summer. And so can we put, Veronica, can you pull up the slide, or I can only see me? There you go. And so everybody able to see both myself and the slides?
Yes, we're good to go.
Excellent. So I chose the title today, Wealth Cycle. Wealth Cycle is a very, I'll say a unique perspective, but a cliche, right? Because everyone has an idea of wealth. Everyone has a perspective of wealth. Everyone has, or a lot of people, I won't say everyone, a lot of people have an ambition to acquire a certain amount of wealth. And I feel, and my company, and the work that we do, we feel that a positive wealth cycle will provide financial security and either access to investments or management of those investments that you have. And so that's the why I chose Wealth Cycle today for our talk. And then we'll go to the next slide. And as they shared, I am a UCSB alumni. I'm not shy. That basketball got me from the shy Chicago to the beautiful beaches on the coast of Santa Barbara. Matt Stock came in the winter to the Midwest, board all that cold, they'll travel to come see a young man such as myself perform and give me the opportunity to come to Santa Barbara and play on a full scholarship. With that, I was able to graduate a degree in sociology and as a men's basketball letterman. Now, the focus of my brand is the legacy athlete. That's a culmination of the Energy Institute, the work that we do at Energy. Because we're very comprehensive in our problem solving, we work to set a brand that can be an example of what it is, the work that we're looking to do. And so the Legacy Athlete is led by a weekly hour show that we cover the different forms of legacy and how to go about that from an athletic perspective. And then lastly is LP Digital LLC. I'm head of digital. This is one of the portfolio companies in what I call the engine to the community change that the Legacy Athlete will do. We work with young athletes, the youth who are transitioning into this very broad, very changing sports economy, right? Because everybody knows how athletes are showered with wealth, resources, et cetera. But also in that same vein, we've learned how they've lost it and gone broke. That was a huge story when I was graduating. Now it isn't as dire, but due to this whole wealth cycle, we're looking to intentionally target that demographic, start at a much earlier age due to the NIL, the name, image, and likeness change, and other opportunities they have to make money earlier to provide them with the mental health, financial health, and business health resources they need, along with the physical training to be successful athletes and be ambassadors, where they can do speeches such as this, be institutional givers, possibly have name on buildings for not just their athletic pursuits, but their post-career pursuits following. And so now let's get into the talk of the wealth cycle. And we break this up, next slide. We break this up into three parts of the cycle. The first part is the wealth creation. Second is wealth management. And third is wealth distribution. And forgive me, because when I prepared this presentation, I looked at it in three different even manners of going about it. And you guys have learned that 3 is the number for me. And so this first, when we talk about wealth creation, we'll look at this from a very workshop perspective. And so if you guys want to take notes, that first wealth creation, we'll be able to go to the legacy checklist. Will be a great time to take the workshop. The second one, the presentation, we talk about wealth management. Due to that's a lot of personal experience, and a lot of us are in that generation. We'll look at that from a more presentation perspective. And then the last, wealth distribution, we'll have that and discuss that in more conversation style, because I can't lose my roots from the radio show. So I like to have conversations. I like to just kind of set the table. You'll see the pertinence when we talk about wealth distribution. So let's dive in first to the wealth creation. And I'll give my personal disclaimer. This is my perspective and my institutional perspective regarding some unique things that we can go about, not only creating wealth, but coming down the hill, because I learned this year that sometimes when you come down the hill, you actually need more help coming down the hill or coming down a mountain than it is going up a mountain or up a hill. And so, and we'll discuss that as we look at the wealth creation. So going up the hill, wealth creation, this is the first part of the cycle. It's generally considered for the first generation and is investment focused. All right, so what do we mean by that? First generation. I know in Santa Barbara, we hear a lot around first generation, whether especially in the minority community, whereas first generation college graduates, first generation college enrollees or admittees. There's a lot of things around first generation. But even in the wealth of the world, most of the people who have wealth or who are in the Forbes top 100, top 400 are generally all what we call self-made, right? Or first generation. And they had to invest into something, right? Which is why the investment focus, that they invest into, whether it's a business, more importantly, really themselves in order to create wealth and generate wealth. So the top 1% of Americans own 37% of the country's wealth as of 2013. Top 1% of Americans own 37% of the country's wealth as of 2013. And as you get closer to 2022 and even go back to 2004, that number hovers between 35 and 40%. Right, so 37% is a great number. You guys see a like 3, so that's why we chose 2013. But because this is the Black student, Black Alumni and Student Connect weekend, I want to dive into this number a little bit deeper, right? The top 1% of Americans own 37, let's say approximately 40% of the country's wealth. Of that top 1%, according to the Huffington Post, regarding an article around America's financial divide, 96.1% of the 1.2 million in the top 1%, right? So of the top 1%, there's 1.2 million, right? That's approximately 1.2 million people in the top 1%. 96.1% of that 1.2 million is white, right? So that's 1.15, right, million people in the top 1% are Caucasian, and they own, their average net worth is around $8.3 million, right? 8.3. Of the top 1%, 1.4% is African-American. That's 16,800 families, 16,800 families, and their median wealth is 1.2 million, right? So of that top 1% that owns approximately 40% of the country's wealth, 96% of them are white, 1% of the top 1% is African-American. And that's not the good part of the 1%, right? You know, because the top 0.1%, the top 1% of the 1% owns, is a whole spectrum between, let's say, the top 10,000 families versus the bottom 10,000 families, right? There's a huge difference between the 96%, right? The 96% has $8.3 million, and the African Americans have 1.2 million. So that's a huge gap. So that's the gap we're looking at for wealth creation on the top side. Even looking to the median, right? The median Black family net worth is $1,700, right? According to inequality.org. The median white family's wealth is $116,000. Right. So not only are we looking at a pursuit, right? If this is someone, you're here for financial security and investments, at some point you're looking at, how do I grow my money and how do I protect it, right? That's says simply, that's financial security and investments. Now, where are you starting from? Right, according to the numbers, the majority of people here from the Black student alumni We're starting as a family at 1,700 and the best of the best at 1.2 million. All right. So next slide. So remember this portion of the talk is really the workshop portion. So let's get out your legacy, your checklist, right? And so if you look up the definition of legacy, you're going to get mostly transferring property, right? The ability and the success of transferring property from one generation to the next. All right. You dig deeper, you'll find the definition just speaking of who the person is. Like, who was I? What was the legacy that I left, right? Based on my efforts, my impact, based on what I did. So I wanted to lay out very clearly a checklist to go about. If you're in first generation, right? If you're first generation, you're the one starting this, changing, bucking the trend in your family, bucking the trends of America, and you're going about the journey of building wealth. And I know there's a bunch of other speakers, a bunch of other processes, a bunch of other perspectives to go about this process of the wealth creation. But I know if you're anything like me, a UCSB grad or UCSB undergrad, you go about things a little differently. You go about things a little creatively. So let me take you on this journey around this legacy checklist. And so you have the internal, right? The internal, that's the part of the identity. That's the who you are, the legacy that you leave in that self, in that way. So how well do you go about leveraging yourself, right? How do you take care of yourself? How well do you handle your nutrition? How well do you handle your personal fitness? What's your spirituality like? And in this checklist, identify what's that priority, or what's that weakness? What's that thing that in yourself that you can look at and say, hey, this is this form of my personal fitness, my nutrition, my prayer life, I can get better here, right? I can be operating at a better optimal level in this manner. So how well are we engaging our internal from the self perspective? Now we look at the internal, and it's human, right? We've all heard of human capital. We've all have experience with relationship building. We all have been asked, or not say all, most of us have been asked to make a referral, or if you have someone that you know that does this, can you send them my way, right? It is even now talk to actually value your relationships, value your database, knowing, like, who am I giving this referral to? How well are they going to protect my brand, my legacy, when managing this referral? Even as simply as referring someone for a job. How often has that person went into that job, gotten that interview, and actually called you and got coached through the interview, leaned on you to understand how to navigate onboarding, actually successful, use that human capital, you use that human legacy that you've built up or you were a part of in their life to be able to successfully leverage that to a larger paying salary, access into a unique contract, getting able to be an equity investor in a new project. How well do you leverage your relationships? How well are you intentional? How well do you know where's your primary source of relationships? Where can I go for human capital? What can someone value me and rely on me if they need a referral in this? How well have we identified from an internal perspective our legacy? What's that human capital value? Then we go to social, right? And there could be some overlap in human capital versus social capital, but social is more like, what's your lifestyle? What do you like to do for hobbies? Who's there? Is that the same person that you are professionally doing a business with, a project? Or is that the same environment that you're engaging? Because a person like me, I like social. I like to go outside. I like to go to the forest preserves. I like to go to the beach. I like to go to the water. And yeah, every so often I may meet someone that can become part of, I'll say, my human capital to do professional business with. who most likely I just like to hang out to get away from that, right? But how valuable are you doing that socially? How intentional? Do you own the boat that you're going on? Are you renting? Is a friend on it? Right? All these things are part of your legacy or create who you are. How do people remember you? And what's that journey like to help create the wealth for that first generation? Then we move on to intellectual. This is where you're able to give a webinar, do workshops. What is that thing that people look to you to speak upon? What is that space that you have, that book that you want to write? You have a TEDx that you want to give. And I hope as we're looking at, and if we're doing the exercise and taking a note and thinking about what's that first thing that comes to mind when you hear this, write it down. Take account. Because if you're in a space of creating a new revenue stream, that may be it right there. Right? I know you have a relationship. I know UCSB has someone in the network to help you monetize that thing. And so as we come at this wealth creation from this legacy perspective, hope we're just adding up all the unique ways that value can be created. Or it's simply that someone hears your name, they just smile because of that information that you shared at the right time, or that person you introduced to them that gave them life and inspired them. Or the way that you went about your workouts and then you've lost weight and eaten better and glowing. Right? Have you internalized how impactful that is to your legacy and directly correlated to your bottom line? And from that last one, the internal side, we have instructional. I know I'm not saying anything new to all these innovators here, but we live in a world who doesn't have a module, who doesn't have a training. Like I know if you're at Facebook or your social media, your IG look anything like mine, somebody's selling an ebook, somebody's selling a masterclass, somebody's selling to teach you something. That's instruction. And not only the thing about it, when you look at your legacy from an internal perspective with what you can teach, it's that thing that how you teach it. Right? Because we all have a unique, innate intellectual or knowledge or things that we know, but everything we know, we're not able really to teach. You may not be comfortable to teach it. Maybe something that's just innate that you just do. Somebody have to watch you. So now you know, all right, if it's just something I have to do, now I have to record myself and have that archive for people to watch it and learn. And maybe I need to find a copywriter to help me write out the audio or the oral instructions or the verbal instructions or the written instructions to go along with the video that they had to watch me do. But that's how you leverage that instructional, like how you teach, what you know. So when we summarize, look at the entire internal checklist, one of these 5 things, how many of them are you doing on an everyday basis, weekly basis, monthly basis, yearly basis? Is this something that we're consistently engaging in? And now we go into the equity. This is external. That's the unique things that go out into the world, right? So that's your public. There's grants, there's public contracts, procurement. How well, like there's here in Cook County, there's a tax sale that just occurred. How well are you engaged with the public capital that surrounds you in order to build wealth? Commercial, simply your business. And this is one I ping because the majority of the investments, the majority of the money made by the top 1% is in their business equity. 60% is in their business equity. The commercial, what business did you start? What business did you invest in to become a silent partner? What franchise or license did you see that you want to get engaged in? That's a 90% success rate in the first 5 years for an industry. All right, because when you look at, you want to get in that top 1%. Like I tell the young men who I coach who want to go to the NBA, when you set your aspirations on wealth, then what that means, you've made a decision. You made a decision to operate a different way. You made a decision another level of standard of excellence. Right? How do you engage and add these things? It takes building a team. It takes having an inner circle. Right? It takes the left side, the internal, to match with the right side, the equity, to create that complete legacy checklist for the ultimate goal of wealth creation. And so, mind you, when we say I'm setting the stage, that this is a generation, like this is someone's lifetime. Right? If you're a first generation operating on all these cylinders, aspiring to, by the time you pass, we believe would have set your family up in the path where they'll know what a leader looks like. They'll know what it's like to set a foundation for a legacy, and prayerfully see you create that legacy, that wealth, where now they can move into what they need to do and going into the next generation. And some of the unique things that occurs from an equity perspective is natural. So real estate, your land. What land do you have? Doesn't have to be 100 acres. Do you have 1 acre? Do you have a half an acre? That's something you're aspiring to. You're looking to develop. Are you at the commercial space where you're developing commercial properties? So you got your commercial business, but do you own the property that your business sits on? Or are you leasing the land? How well are we positioning ourselves, both internal and equitable, to leave a legacy, to be wealth creators? Because now you have the financial, right? Because we say this last, because I'm sure if you've done all the other things right, you'll have financial equity, you'll have insurance, you'll have investments, you'll have cash to be able to speed this cycle up, to create more wealth, to put that money back to work, to hire more people, to go to a better gym, to have better nutrition, to invest into your business, to scale, to buy bigger acres of land, to really position your legacy in a manner where this checklist is getting checked off, where you're adding new things, you're archiving. Because we're not just trying to fill this checklist up, it's how many of them do I have, right? How well can I speed this process up in my lifetime? Because there's coming a day, next slide, that we're getting to where someone is gonna have to manage this wealth. All right, go to the next slide. And that's generally the next part of the wealth cycle, represents the second generation. Right, and we know, and the primary focus here is education for this generation. As we remember the investment, like that wealth creation, they have to make investments that come with a lot of risk to get the reward. This generation in the wealth management cycle, this where we start to see it go wrong, because uniquely, imagine, like I just had a brand new baby boy last week with my kids. If I was to be a first generation, what they would know is to watch and see would do what I would do, right? So they know they'll be more apt to taking risk, trying to fill up that checklist, right? But less concerned with getting educated about what's already there. Now, how do I take this and manage it? How do I acquire the skill sets that took investment to be able to manage this and scale it for growth? Right? Because 70% of wealthy families lose their wealth by the second generation. Like, that's major. You're quickly into now that this makes me think, Coach, about baseball, where it's just like being successful. You're one of the best if you're batting 300, right? In basketball, you don't get a chance to shoot too much if you shooting 30%. Like we don't, yeah, that's you do something else, right? In baseball, that's the unique sport. If you batting 300, like you're at the top, you're all-star level. But here, think about 70% of wealthy families lose their wealth. So if you've passed on something to the second generation, like you're doing well. You set your heirs up to be in the very minimum scenario of those having to start from scratch. So next slide. And we look at wealth management, like what's the education focus? It's the one thing I want you guys to leave with some presentations, the holding company, right? A holding company. So we started it with in the first generation, right? The first generation, that group, that's you or your parents, your grandparents, great grandparents. They had to invest into finding their way. They had to be very well-rounded. They leisure well. They go to dinners. Everything's efficient and done well. But now you're that second generation, and this is what I'm more attuned to here, the second and third generation. And so for us, like you wake up, your parents own a business, they may be married, they done went to college or something, or they're going to college. Like you're born into a scenario or an environment, right? If you're like me, my family owned a business. And so now, just like as any person who grew up with wealth creator, I want to create my own business, right? As you guys heard, I got a business, got a new one called CD Imports, where we are in the beauty space, selling extensions from China and India, but more importantly, working with young execs, individuals on college campuses. We're starting HBCUs to help empower them to start to understand what to get into commerce and sell a product that's culturally sensitive. And so that company is a partner with someone that I have a certain amount of equity in there, but now that equity goes into a holding company. Like, why do you have a holding company? It's to aggregate the business interests currently owned by the family, right? So family size changes. Everybody in the family is an entrepreneur. But again, we're talking about second generation. You need some to ping second generation. Again, personal disclaimer, I say second generation, you're one of three things. Parents have been married, right? So you're second generation, a two-parent household. Second generation, your parents are either college athletes, or in third thing I say, your second generation parents are business owners. You can say corporate, kind of here or there, but it's a tad bit different in those, what I say in those three things. But that's second generation. And this structure is executed and associated with a family office, and in other scenarios, a trust based on the short and long-term goals, including diversification, philanthropy, ESG, so that's environmental and social and governments, and passion projects, right? So the holding company, why it's a good thing to learn about, right? This is the education focus for that second generation. So again, imagine waking up, parents own the business. Now your job is, how do I manage this, perfectly scale it in a manner where now I can buck even a further trend of passing down this wealth, this company, to my heirs, right? And business interests currently owned. So this is created to get business interests. And now for those who may not have multiple companies, parents don't own companies, maybe they have one. Here's your unique term: to leverage the relationship, leverage the legacy created by your parents to create the wealth, right? In order to add business interests, to start your own, right? Or your family's in the process of scaling the business that they have via franchising or licensing, right? A great place to start education around the myriad of ways to manage family wealth, right? Because you don't have to, expand out, right? Because you, with a holding company, you can just be looking at this, all right, I'm gonna have a shoe company, I'm gonna have a beauty company, I'm gonna have a media company, I'm gonna have all these diverse conglomerates that kind of work together, but really just are all off of themselves, right? So that's at minimum the leveraging the business interest into a holding company. Now when you move into a family office and in other scenarios of trust, right? Because a family office is for that high network, that top 1%, because it's nothing wrong with setting your goals, right? So if I'm gonna benchmark something, let's benchmark that top 1%. So that top 1% they're looking at, or you were looking at, setting up a family office in this accordance with your holding company, right? And the family office is for you to be able to manage your wealth and engage this wealth all in-house, right? So that's taking a holding company to another level. You have a whole plan, you got staff, investment advisors that are coming in and manage that. Then in other scenarios, you have a trust. Some people may have both, all three, right? But the trust allows for you to pass down this wealth, depending on what state you do it in. Again, regarding and amidst the laws necessary in order to create less taxes being paid, more wealth being passed down. Finally, how do we allocate the returns from these business interests? So again, we have this holding company. This just isn't the end all be all. Like, this is collecting interest, collecting the equity from the business interest owned, right? Or from the investments that you've made, the family office or the trust, being able to acquire and own new businesses. But so those things are generating returns. They're generating some level of interest. And now what do you do with that? We suggest you look at alternative investments, right? And some including real estate and venture capital, right? Again, this one slide is still representing one person's livelihood, right? So if my life, look at, all right, how do I take my parents' business, kind of the ones that I start, my brother start, my wife, how do we structure this in a manner where it protects it from a tax perspective? It allows us to invest, allows us to diversify, allows us to keep score. And then let's identify how do we allocate the returns from this in a way that further protect it, right? To leverage for more growth, right? Such as real estate, which is self-explanatory, and venture capital, right? Being in California, Silicon Valley, being able to invest into businesses, best into funds that invest into early stage businesses, right? So next slide. Now, it's like we're getting ready for war. This is where we going up against the 90%, right? This that senior night against North Carolina, right? We got all hands in, all hands are on deck, right? So we've started the journey from that first generation. Now you had 2-3 kids. Now they've had each 2-3 kids. Now the tables are bigger, the stakes are bigger, right? It's more hands, cookies in the cookie jar, right? The final part of this wealth cycle is for the third generation, right? This should be more people that got to get on one accord, more people that have different ideals, more people that are learning new scandals and things that went on in the family as people have died off. And so the new feelings and all these things come into managing the wealth distribution, getting to that third generation, because you are able to successfully pass down this wealth. You are now the top 10% in history of generations of families. Like, that's a different level of a history. That's able to successfully pass down wealth to that third generation, right? That didn't put that first generation's work in vain. That didn't put the second generation's wealth management, learning, the education they put in, it didn't put that work in vain. Now we're here having to get more people sitting at the table, more people engaged, more people on one accord, more people executing a plan to be able to successfully distribute this wealth, right? Next slide. So as we're setting that, so now you're sitting here, you're setting a solution environment, right? This is all about setting the table, right? Everyone know about getting that seat at the table. We all about getting the seat at the table. This is the table you and your family, you cutting the checks, chopping the cake up, right? Even in the slides, there's a little bit more going on because it's more people, it's more touch points, more ways to fail, right? So you need more desks, more computers, more people aware. So that's why we're personally focused, because now you got to make sure that each person inside is around getting to that plan, that legacy plan, right? So we started that legacy checklist back in that first generation, whether that's 100 years ago, 60 years ago, 50 years ago, 5 years, 5 minutes, right? You're that first generation. We came with that legacy checklist. So that legacy checklist, now just simply gonna create a legacy plan. We're gonna have some benchmarks, right? We're gonna have some timelines to take that checklist to see, all right, because once you got used to that checklist, essentially by the third generation, we know what the checklist is. Now we have a plan, because we need to set some benchmarks, but we were here this year. Now we want to be here with our financial investment. We want to be here with our natural capital. We want to be here with our public relationships. We want to be here with our human capital, right? You can benchmark that, set some timelines, all right, by this year, right? So that's setting that plan, right? Because we're all in the solution environment, because this is where the rubber meets the road, right? This is where you got all the cousins, second, third cousins that's sitting at a table. Or we gonna cut, we got a small family, so it's a couple tables, couple families. We only got 5 computers, right? But we got to go into this left side, languages, right? Because we want that person in the chair to have 2 things: to have culturally diverse language, so have been well traveled, to have saw some things, to have eaten some things, to have done some things. So that way their perspective, their communication, is a very diverse, globally effective, being able to engage and think very open and receive the level of information needed to be able to target and add the value to this table, right? We want this table, and again, we're setting the table, you're sitting around the table, we want this to be a therapeutic environment to release old ideals. Right? How many of us have ever looked at talking to a financial advisor or an investment advisor as sitting there just like you're sitting and talking to a psychologist, right? At LP Digital, we're looking to merge the two. We merge the two. And when our hour and a half package, you're going to get an hour with a clinician and with our advisor. So we can make sure that all the old ideals, because some of the things in that legacy checklist that your grandparents did may not fit today, right? They didn't have the access to streamed things. They didn't have access to virtual conferences. So the ideals and the way of solving those problems going about that checklist may not be the same. So sometimes we got to, in the therapeutic environment, we got to release those old ideals, right? But be engaged and again, do it respectfully and communicating, right? And making sure that the people, the team that's working with us and helping us have this conversation, their customer service is customized to the needs of our family. Because we got a bunch of different idea types. We got people from the East Coast, the West Coast, the Midwest. So they think different, they operate different, they move different, depending on if it's winter, like here in Chicago, call me, may give me tense, right? I may not be the friendliest all the time because it's cold outside, right? It's not in Santa Barbara, it was 9 today, 9, and it was a snowstorm yesterday, right? So that's that environment. What type of environment are we putting together when we get in the family together to talk about this legacy plan, to make sure that we're going to be the family that's in that 10%. All right, to get started the next generation, the 4th generation off much better than they are, because we didn't have to worry about them getting anything. They just didn't lose everything, right? And one thing that we live by is life insurance, right? What's that level of guarantee that we can provide to make sure that these beneficiaries in this 3rd generation, 4th generation, 2nd generation have something, right? And make sure when we set this table and put it into our legacy plan, that we have a total death benefit goal for the family, right? How do we look at this generation, making sure that all of us contribute to that next generation, to that trust or that family office, and make sure it is well stocked, well oiled for us to be the family that can not only have wealth to pass to the 4th generation, but can endow it to UCSB, that can become a legacy giving scholar, right? So how do we position ourselves that we executed our checklist and we can create a legacy plan so that way here now we're empowered to see that we're going to change. We're going to have a practical plan, a legacy plan that we can buck the system. We can be that top 10%, maybe better yet, be in that top 1%. Thank you. Next slide. And so the LOCOS Alumni Basketball Club is a project that we launched last year. We compete in the TBT tournament. It's $1 million+ tournament, $1 million winner take all tournament. It's an aggregate of guys that's former teammates of mine, but more importantly, young guys who came after us, competing, getting a chance to compete in the summer to represent the LOCOS, further expand the brand of UCSB. And so our goal is the student athlete alumni UCSB connected. So make this type of connection in athlete space with UCSB as the community, alumni as a whole, market the university, provide an opportunity for graduating athletes to enhance their athletic career professionally, learn to fundraise and network in order to foster a smooth transition. So all the things I would wish I had coming out of school. I would play longer, and I've had more joy, had more help, had more resources, and more importantly, been engaged with the school. So the benefit to not only the supporters, if any of you want to help assist, is exposure for our school, exposure for the athletes, recruitment, being able to get them access to jobs overseas and into careers, professionally, network with the immense amount of relationships that not only athletes have, but the sponsors, the corporate relationships that are there, then compensation, right? So this winner take all, we look to fundraise in order to help pay not only our staff, but the players. Our ask is videos showing up support, media marketing, so social media in any of those manners, raising funds. So if you have donations, help us with our fundraisers and then events participation, coming out just like here to be able to engage in a unique manner such as this with our LOCOS, with the community, and especially with our athletes, the ones that are graduating and the recent graduates. And so with that, thank you for having me. Thank you for listening in. Pray you learned something. And any questions?
DJ, great job. Thank you very much for that. I really appreciate, that when you had the legacy checklist, how you talked about the internal aspect of that. I had never really coordinated or correlated that with gaining wealth, but it makes complete sense. So thank you for that. We do have time for a few questions. So if anybody has some, please put it in the question and answer or the chat, and I will relay it to DJ. To get it started though, DJ, I've got a question for you that speaks to your experience at UCSB. I was wondering if you could just touch on something you learned while you were at UCSB or experiences you had that helped prepare you for your professional life, and how that benefited you.
And that's unique. One of the questions talked about in the spotlight is really the ability to multitask in a unique manner. And I multitask from anybody that I tell. I went to school at Santa Barbara, who knows Ivy. They're like, yeah, how did you graduate? And then add that I played ball. It's like what with Ivy? Like the fact that you made it is a unique thing. And so I believe just being able to manage your personal life or your lifestyle, the professional life, so academic, and then that sports, right? That next level of pushing it. And so, because it's like sports in the college space it's extremely unique, right? Because that's like that last time that you have a hobby that's elite and requires more of you than your everyday profession, right? Because after that, you're getting paid. Like that's the primary thing, right? Prior to there at the college level, you're not necessarily getting paid. They're having now more opportunities, but you have to be super on point, excellent at something that isn't your primary thing. So it's like you have something that helps you build the habits in that. So for me, entrepreneurship in sports, the research was that thing that I created to make sure I stayed on point, stretching myself intellectually, as well as having that balance not only from a family and then professional, the pursuit that I take on.
Great. Thank you for that answer.
You're welcome.
Anybody have any other questions? I think I have one here. Here's a question for you, DJ. In your bio, you have a lot of boards that you attend, that you're on, and committees that you are on. Speak to how that benefits you in your profession and wealth management, you know, being on boards and committees.
Access to information. The one thing that I've learned uniquely as I've grown professionally and in public service, and it's just the access to information, getting close to the source of information, right? We live in the information age, right? And even more we move to the digital, is like information is valuable. It's called big data, right? That's another word to say information and the value of information. And so when you're on boards, when you're on committees, you're either the source of information, you're the source of deals, you understand the strategic thought of people who create deals or create opportunities, projects. And then now you have a personal relationship with the decision maker, right? So it's completely different to have a professional relationship with a decision maker when you can start it or go beyond that and have a personal relationship with a decision maker. Now you're in that manner of, all right, me and my boys, we all grew up and integrated into different parts of society and are working to help each other based on what we know or what we can through a contract, right? So it's like uniquely doing that in a professional way is getting on those boards and commissions. So access to information, being at the source of information, knowing how information, how deals, how contracts are created and why they're created to solve what problem and why they're solving a problem is extremely valuable.
Great, thank you. Here's a question from Shauna. A great question. She says, when you graduate, you're so focused on getting a job so you can start paying back student loans. How would you suggest to begin investing with limited income and resources?
Gotcha. It's first, the unique thing is knowing what the budget is, right? But budgeting first your time. Right? Because if you can first understand how to budget your time, you can uniquely create ways to better leverage that new legacy checklist that you have, right? Because that legacy checklist is going to uniquely help you create new forms of revenue streams. Always think in a creative manner, in a building manner, where you're changing your mindset from quote unquote limited resources, because the resources are there. You're UCSB graduates, like you have an immense amount of resources, right? You've lived in some of the best, like you once you look around and see like, yeah, I got the resources, is how well am I positioning myself to leverage them, right? How well am I taking in enough diverse information to know that I can't pay 90% of my check to my debt, right? Maybe it's 20%, maybe it's 10%, maybe it's 30%. But one thing I've always learned, and as a financial advisor, to get direct to the question, is you don't want to put your position paying off dead money to not have any live money, right? Debt is dead money, right? It's either, they share the same two starting words, DE, right? That's dead money. So albeit it's good to get rid of debt, but why do corporations have debt? Because they sell debt, right? They use that to liquidate, right? So debt is dead money. So you don't want to be paying more dead money than you have live money, right? So live money is things that get you to move and create more money, right? So would you feed something that's going to feed you, or would you feed something that's taking and draining you, right? But just know, if I'm going to do if I have debt, let me allocate some to that, but make sure I'm allocating to an area that's going to give me more resources to pay down that debt faster or create more revenue, to create more time.
Great. Thank you, DJ. I think that we're about out of time here. So Veronica, if you don't mind putting up the slide that has what's next. Thank you, DJ, for your time. Thank you, Shauna and Veronica, for your help with putting this on, and for all that attended. It was great. And DJ, really appreciate your insight. Looking at what's next, it looks like 12:30 to 1:30 is the keynote speaker. There we go. Thank you, Veronica. from Dr. Jeffrey Stewart. And then after his keynote address, there is some more workshops, how to land your dream job and networking your way to success. And 4 o'clock is a network mixer. So having said all this, again, thank you for everybody's attendance, and we appreciate your support in this event. Look forward for the rest of the weekend. Shauna, anything you want to add that I forgot before we sign off?
I think you pretty much covered everything. Thank you, everybody. It was a great session. Thank you, DJ, for your time. Matt, thank you for helping us get DJ. So yeah.
He's my pleasure. No, thanks, Shauna. All right. Thanks, DJ. We'll talk to you
You're
guys
welcome.
later.
Thank
All right.
you all.
Bye,
Talk to you
everyone.
soon. Bye.